Good morning, everyone. Pre-market review and also the week review for September 8th. What are we looking at in here? September 10th, PPI. September 11th, CPI. Now, let me just tell you how I'm looking at those. Number one, when you have a lot of buybacks, bad news is less likely to matter. And I'll show you the earnings calendar and when buyback blackouts start. What acted the worst on Friday? JP Morgan. When do they go in their buyback blackout? Tomorrow or Tuesday. Keep in mind, a buyback blackout does not mean the stock's going down. Just means bad news or bad charts are more likely to work. That's all it means. And as you saw, the bad news with the BLS report, the non-farm payrolls on Friday. What happened? It rocked the stocks that are close to their buyback blackout, whether it's Goldman Sachs, American Express, JP Morgan, and I think you'll see more of the same this week. Now, there is a big deal when it comes to this on September 11th. Keep in mind, ever since 2001, when the September 11th, the awful thing that went on, just keep in mind that day, I call it the patriotic effect. The stock market has gone up almost every single September 11th. Almost every single one. So you don't play the markets to the downside on September 11th. Now, you might ask, well, how about the next day or the next week? Variable. It's when you get to the preponderance of buybacks, which is into October, that matters. So I'm not sure the CPI and PPI are going to matter. But is there a way to have somewhat of a tell of what they're going to be? There sure is. And let me show you on how to do it. I would just go to Thinkorswim or TradingView and go and look at the agricultural ETF, the DBA, and you're going to see on a daily chart what's it look like. I like looking at a 3-day chart. It sort of gives you an idea. Remember, CPI and PPI are look backs, month look back. What did the agricultural commodity index do within the last month? Really not much. It's not like it sort of did go up. Don't get me wrong. It just didn't go up that much. How about the one that includes oil, the DBC? You're going to see it did nothing. So I would think the CPI and the PPI come in about in line. Now, if you right now told me they'd be in line, does that mean markets go up or down? Well, September 11th, yeah, they have a tendency to go up anyway. So that's not exactly where I'm looking for the trades right now. I'm going to show you a couple of scans and a couple of ways I do it. I'll show that in a minute. So the first thing I want to show you in here is the CPI, PPI. The next thing I want to show you is what earnings are coming out this week. So I love going to most anticipated earnings on Earnings Whispers. I'm actually have an agreement with them where I'm allowed to share it. So you're going to see the biggies are Oracle and GameStop. You got Chewy before the opening on Wednesday. I still don't know how Amazon let Chewy even exist. I'm in awe of that. Kroger Thursday morning, Lovesac Thursday morning, Adobe another big one after the close on Thursday. So you're getting some coming out, nothing to do really with buybacks, but I thought I'd show you that anyway. Even though some of those might have buybacks, those haven't been the bigger deal. Now, you might ask, why on earth do you care about the buybacks? Because this quarter, companies have said they're buying back a ton of stock, especially in July. So I'm just telling you right now, when you get into the buyback blackout, it might matter more than it did before. And that's the next thing I want to show you, the earnings calendar. So we're going to go to finance.yahoo.com. Just keep in mind that this is free. Everything I showed you, whether it's earnings, economic calendar, earnings whisper, it's free. Don't pay for this stuff. It just same thing as a lot of indicators you can reverse engineer. I wouldn't pay for those either. So the first thing you're going to see if you go to Tuesday, October 14th, you start getting in there. 23 earnings. What do you get? Well, you're going to see you get the JP Morgan, the JNJ, the Goldman Sachs, a lot of financials, and they have buybacks. UAL has a buyback. So how about the next day? 35 of them. Yeah, you're going to get things like Bank America, Morgan Stanley, buybacks. So PNC, buybacks. So you're going to start getting them. Now, you're going to see that the earnings, and I mentioned this about when the buybacks start, the buyback blackout and earnings 23, 35. Yeah, that's a lot until you go to the next week. Then you're getting into the 60, the 120, the 160, and so on. And there are a ton of buybacks in there. So usually the buyback blackout starts in earnest on September 8th to September 9th, like I said, led by the financials. It's 5 weeks prior to earnings. Then the crescendo is really about October 20th. That's where you have half the stocks are reported so they can buy back and half have it. So that'll be a big deal to watch. Now, what else am I watching in here? Well, I'll show you. Number one, the market's reversed on Friday. Don't forget that the S&P reversed dramatically, and usually when you get a dramatic sell-off, now keep in mind that was led by the financials, and I'll show you what we're talking about. So there's your Goldman Sachs. Wow, that's a big reversal. That's about 28 points. Usually when you get that big a reversal, you test the lows at least once. Now, you might say pre-market, it might have. So I'm going on the actual non-pre-market S&P. So just go to the SPX here, which it might have erased on here. Take off the drawings, look where the SPX is, realize that this morning, this is non-24 hour. So keep in mind that this on the right up here. So we're going to go and take the ES is up 11. So the S&P is going to open right here. So theoretically, it tests a low at least once. So if it tests it, though, then you got to worry about that being a bear flag. Now, do I think it's a bear flag with the buyback time? It could be, especially because even this morning, the financials are acting weak, and they led to the downside. So usually they test at least once. Now, that being said, the NASDAQ rallied. So the NASDAQ rallied on the close. So let's just take the non-24-hour NDX, and you'll see it went from down 100 to up 10. So I'm not sure about that one, but these could be valid reversals. I am going to look for the stocks, if I play it on the downside, that had big red candles. And I'll show you on how I do it. So all I'm doing is I'm doing this. I'm going to Thinkorswim, and you know I like to do scans that I find for free. So all we're going to do is take my main list. My main list is a lot of stocks, about 200. These are the most active. Now, I add a lot of other things to them, don't get me wrong. I'll add, if something gets hot, like a lot of oils or a lot of gold stocks or something that's in the news, a lot of biotech stocks I don't normally do. But the criteria is they have to be optionable. They have to have a lot of open interest. They have to be relatively expensive so they move a lot. And they need to have good volume, average daily volume. But when I go to my main list, I want to show you something eye-opening. We're going to go on the left. We can do a scan on the right or the left, but we're taking big red candles. And it's one of those things that you'll see what a big red candle looks like. So we're going to take this. We're just going to take a big red candle. You can take 5 days. See the Brecher big red candle? Or you could do it even more dramatic. I've done bigger ones. So I've done big red candles that are 3 days. And this has a bigger wick. So let's just show you what I mean by a red candle. That's a red candle. So many interpret too many candlesticks. So they see bearish engulfing or bullish engulfing. If it's a tiny candle, of course, you're going to have a lot of bullish and bearish. That's not the way I do it. I do it by the big red candle. Now, I know that's DBC. We're not caring about that. But go into here and sort it by expensive. And you're going to see things like Goldman Sachs. Go put this on a daily, not 3-day. That's a big red candle. How about MasterCard? That's a big red candle. GEV has had a lot of red candles. These are red candles within the last 3 trading days. So you have Microsoft. Now, that big red candle worked great. Yeah, that was a big exhaustion gap. That's mentioned this on StockTwits. This is after you have a big move up, you get the crescendo. So that's your crescendo. You get them on the way down also after a protracted down move. You get that whoosh. Now, what else are we watching? You got Visa up here. Look at those red candles. Usually, after that damage, they test the low from that day. Now, I don't know about Broadcom. Yeah, we'll see. Not sure yet with Broadcom, but I'm just telling you the financials, the American Express, even consumer stuff, consumer discretionary, which to me means the Hilton and the Marriott's, means the credit card companies like the Capital Ones. It means the Ultas. So I'm taking that the weak unemployment on Friday is resulting in consumer oriented stocks, whether it's the credit cards, whether it's the banks, whether it's the consumer discretionary like Ulta. So with the markets up, those are the areas I want to fade. Now, on the long side, what am I looking for? I'm looking at this. I want you to realize what this is. All this is the ATR trailing stop, which I've done a video on it, the 9 and the 20 moving average, which I had a tremendous amount of views, and the 50. So theoretically, you're looking for things in an uptrend. Then what we're doing, if you want to buy something. So if I want to buy, I'm going to be picky, and I'm showing you what I'm talking about. You take General GEV. So this stock looks like it's beginning a downtrend. I put this on social media as well, but it's oversold if you include the MACD. So it's oversold in a downtrend, so I take that off. Maybe fade the opening if it fills that gap. As long as then you go to a shorter term chart to time your entry, like a 15-minute chart. But if you want some long ideas, which I'm not saying you want to do, but if you do, I'm doing it like this. I'm taking stocks that are over their 9, over their 20, over their 50, and their candlestick is higher than the previous day. Think Thermo Fisher. I put a list of these on social media as well. What are you noticing? Number one, it's oversold. Number two, it's over both moving averages, and it's over the 50 and the ATR trailing stop. And the candle on Friday was higher than the previous candle. I like buying things in uptrends. It's fascinating. Go and look at this when they test their 20 of when you buy them. Yeah, when the candlestick is higher. So just keep that in mind in there. It works pretty darn well. So that way you're not stuck because it can go down fast. You don't know, like GEV, when it's going to stop. So I did one that's just a Brecher bull scan. So all I did is this. I took a bull scan, and I have some funky ones. I took a bull scan with the MACD under 0. That's like Thermo Fisher. And check out some of them that showed up. You got Caterpillar. Candle higher than the previous candle, oversold in an uptrend. Barely. But at least you have them. And like I said, I put on social media the ones that spit out. So we're looking at stocks with big red candles to fade rallies. And I'll look for uptrends in the stocks that are oversold in an uptrend. So have a great week. I'll probably do updates more during the week as long as I see something to do. So take care. Have a great one.